So welcome back to this video. The next thing we want to do is we want to derive the revenue in this assumption section. So the townhome sales is going to be based on an if statement. So what we are saying is that if the date that we are in is equal to the date at which sales start, then what we want to do is we want to sell let me go there. So what we want to do is we want to sell 35% at commencement of the total number of units on the very first date. So on the very first date, it could be sales to family or friends or whosoever. That's the days at which sales start on the very first date. So we are saying that if the time period where we are in is equal to the date, we want to sell 35% of this total number of units. Otherwise, if the date that we are in is greater than the date at which sales start, then we want to sell the minimum of 3 units here, or the difference between the total number of units and the cumulative sales. So that's what we are going to be accounting for in that formula. So what I'm saying is that if the date where we are in is equal to the date at which sales starts here on September 1st, we are selling 35% of 60 units. Otherwise, if the date that we are in is greater than the date at which sales starts, then we are selling the minimum of 3, or the cumulative difference between the number of units and the cumulative sales. That's it. So we are selling either those minimum amounts if the date we are in is greater than the date at which sales start. So pretty much that's it. So when I go back, I'm gonna say equal to if, in bracket, the date that we are in is equal to the date at which sales starts, reference that cell with F4, then what we want to do is we want to sell 35% of the total number of units. Reference everything in the deal summary section with F4. Then if, in bracket, the data we are in is greater than the date at which sales starts, then what we want to do is we want to sell the minimum of the lesser of these units sold per month, which is 3, or I have to reference that with F4, or so you reference that with F4 in the deal summary section. Or the difference between these total number this total number of units and the cumulative sales. So that's what we are saying in this formula. So that being said, and then close that. Otherwise, 0, we are not gonna sell anything. Close those two and we press enter. And then for the cumulative sales, it's going to be equal to the prior plus the current. So we can take all of this all the way to the end of the cash flows to see what happens there. So as you can see, the formula just gives us what we want. On the first date, the date at which sales start, we sell 21 units. And then after the date, which everything is gonna be the minimum of the units per month, which is 3, or the cumulative, the difference between the total number of units and the cumulative sales. So if that amount is greater than 3, then we will actually take whatever the cumulative sales will be. So instead, so that's why at the end we have 3 units sold by the end of 1st of October 2019, and then the cumulative sales account for 60 as we were expecting. So that formula is well done. So the next thing we want to do here is, in case of any rounding problems, so we're just gonna go back to this cell, we hit F4, and then we go back to the end of the formula and say M round. We use the M round formula, and we want to round everything to 1 decimal place in case we have some decimals. So we run it to 1 decimal place, we close the bracket and we press enter. We can take this formula again and paste it to the rest of our cash flows. So in the next video, we will be accounting for the townhome closings, which is a similar case to the townhome sales.